Welcome, everybody, to Name Confidential Live.
Hey everyone, thanks for being here. This is Name Confidential Lives, episode 2 of season 2, second year of doing this. I'm the host Ryan Redfern this week, and today we have David Bush, awesome guy, longtime Name member, just cool guy. Definitely more in the crypto space too. So this is gonna be a fun conversation, pushing a little more of what he does in that space specifically. So I'm gonna first start off with the name exposure index. Let me steal the sharing here real quick to. Oh, of course, it's gone now that I'm sitting there. There it is. Boom. Exposure index should be showing now. Currently at 65.38. So kind of in the middle. And I mean, I guess most name members on the defense right now. I don't know if that applies to you, David. I think you used to contribute, but you haven't lately.
Correct.
Where would you be today if you were to be on this index?
Oh, it's a good question. I have a reversionary long short equity strategy, mega cap equities, and it is pretty exposed right now, pretty long, pretty net long. The strategy can be net long, net short.
Right.
So I would estimate probably about 70% net long at the moment.
Okay, so you're kind of in line with the rest of the group at the moment.
Yes, actually, it looks like it. Yeah.
Hmm?
Should
I
that
think I
concern
was
me, Ryan?
No. I think I was actually about 90% on Wednesday when we posted it. We reduced since then, but
Yeah,
I probably skewed this number a little bit higher on that day. So maybe it's
interesting.
my fault we're not below 60. Maybe, I don't know. All right, awesome. Well, let me stop sharing and we're gonna dive into you a little bit. I know you've more set up a little bit of a presentation, and I love the angle you have. It's such a unique way of looking at the markets and crypto and just some other things. So I think you got some slides prepared. So we'll just dive
Yeah,
into how you go at it, and we'll just
sounds
discuss as we
good.
go.
Sounds great. Let me bring this back up and dive in. Yeah, and just interrupt me whenever you want me to just take it from here.
Yeah, dive in. Just tell
Okay,
us about how the things you're going to do.
awesome. Yeah, so the whole thought here, real quick, is I look at equity markets. I have strategies there. I look at crypto markets. I do analysis there. So I just thought, okay, don't have a lot of time. Let me pick one market and share some insights. I figure there's probably a lot of equities and bonds and high yield and so forth, on the name side. So why not give a little crypto is kind of my thought process. Obviously, nothing I'm going to say is investment advice, etc., all just for educational, informational, analytical purposes.
Perfect.
So first image here is simply, I believe it's a weekly chart of Bitcoin.
Mhm.
The name crowd is going to be very sophisticated, so I'm sure most people are familiar with the basics of Bitcoin. It's possibly not, but some are going to be deeply knowledgeable. Others maybe just a little bit. But this is Bitcoin weekly chart over the last several years, probably 8 or so years. Um, the halvings are shown as well as midpoints of the halvings. So the halving, just real quick for those who don't know, is when the block reward of Bitcoin gets cut in half. So initially it was launched with a 50 Bitcoin block reward roughly every 10 minutes, which miners compete with algorithmically through brute force CPU computing, etc. So there have been 2012, 2016, 2020, and now last year, 2024. So there have been four, I guess, halvings, and the block reward always gets cut in half. So it used to be quite substantial. Now it's 3.125, I believe, as of last year. So at any rate, there's a dynamic for that is typically referred to as a 4-year cycle. It's not a perfect 4 years because Bitcoin exists in block time, not in temporal time that we're used to. But it typically is a roughly, 4-ish year cycle historically. No guarantee that will continue, but it has been really strong, and it's related to the halving in large part, not exclusively. So that's why I've just kind of started with this slide. And you can see in this period here where there's a peak on kind of left side of this chart, top of the yellow highlight, which is the 2017 Bitcoin high. You can see that was just below 20,000, corrected to roughly 3,000. bounced up to in 2019 into the 14,000 area, corrected again, early COVID. The halving occurred, and following the halving, we saw that explosive activity, impulsive activity to the upside in Bitcoin, put in the high in 2021. And we'll look at like how far past the halving that was shortly. And not only, did the halving occur, and then obviously the subsequent rally that I just talked about, prior to the halving and prior to that very bullish run last cycle, you saw the symmetrical triangle form. So skip to kind of the latest cycle, and you see the bear market of 2022, when basically everything was going down, bonds included, obviously crypto, Bitcoin here. The recovery from that has formed this cup and handle pattern. And so for much of last year, for kind of the middle part of last year, 6 months or so, you saw the so-called handle form, which is this base on the right-hand side. And since that, once the election uncertainty was resolved, obviously administrations are changing, et cetera. We could talk about that if you like, but we've seen this, obviously this resurgence in Bitcoin, a lot of altcoins as well, Ethereum or Ether as well, but Bitcoin primarily, since it's the number one, it's very established, and many other reasons we could talk about. But so that's just kind of overall context for this conversation. So I'll move it ahead and interrupt me at any time. But that's a chart I might refer to just kind of verbally here as we go through. So right now, what's happening in crypto, that's kind of what I want to talk about. You'll hear some people say, maybe it's topped already, or Bitcoin is topped, or it's in a bubble. How do we measure this? Obviously, we don't have time to go through all of the metrics that I follow. They kind of break down into technical analysis metrics, obviously quantitative as well. I do statistical analysis on crypto and Bitcoin, etc. I don't really have that as part of today, the quant side. But there are also on-chain metrics, which are unique to crypto, in which one is, for those unfamiliar, one is tracking the movement of coins or tokens. If it's a blockchain built on Ethereum, for instance, an ERC20, that'd be a token analysis. But anyways, on-chain metrics are following activity on the blockchain, bottom line, and those can give really unique crypto-specific kind of insights. So it's kind of a little bit of a mix here today. Obviously, this is just a standard daily chart here. This is what I just call the altcoin index. And to get that, what I do is I take all crypto market capitalization, subtract Bitcoin, subtract Ethereum, the number 2 cryptocurrency, and then take away the 2 largest stable coins, which are Tether and USD coin or USDC. And so you subtract those 4 assets, and you really get, sure, there are a couple small stable coins in the mix here, but basically you get the altcoin picture here. Some larger and some very, very small, speculative, coins on the lower market cap rank side. At any rate, we've seen this channeling activity in this altcoin index here. This year, we've had a strong run post-election. We've had this corrective period for much of December. We had this kind of breakout from this yellow channel, and subsequently this pullback. Obviously, a little bit of reversal today. So from just a technical, short-term kind of daily chart picture, to me, this is a chart I watch for the broader market. And, we could talk about this chart, but basically I could see a longer period of consolidation for this chart. I could also see a further correction, maybe to that 100-day moving average, sure, et cetera. So that's just kind of just where we are from a technical short-term perspective. And this, as I have on the left side, it represents just under 24% of the total crypto market cap. So it's kind of phenomenal. When you just take away 4 assets, you're left with just 24% left of the market cap, or in other words, we're looking at 76% is of the whole market cap is represented by Bitcoin, Ether, and those two largest stable coins.
Yeah.
But this is a good gauge for altcoins, so that's what I look at. Now, this is another way of looking at altcoins. So this is a little bit more involved. And what this chart shows is on the right-hand side, there's a percentage scale. So you're really looking at the percentage of the total market cap, or in crypto terms or crypto lingo, it's often called dominance. So what you're looking at is the bottom 90% market share, essentially. So if you normally people are talking about the top 10, right? The top 10 crypto assets. It includes Bitcoin, Ether, those two stable coins, and 6 other assets, which don't matter to list right now. But if you take those away, everything else falls into this chart. And so it's basically showing you the altcoin market share. And what I want to point out is and this is of course evolved, right? When Bitcoin started, that's 2009, no one knew about it except Satoshi Nakamoto, whoever that is, or was. Obviously then there were some early adherents and people who started to build the network out and become a node and so on and so forth. Over time, actually, there's been all sorts of stable coins and projects, some very serious, some ridiculous, more in recent times, a lot of ridiculous with the meme coins. But at any rate, so this is definitely an evolving landscape, but that yellow box up top shows a peak for altcoin dominance, even though they're the minority of the market cap share, but that peaked around 20%. So I feel that altcoins, from my perspective and a lot of other charts that we don't have time for, altcoins, they certainly have had their periods where they've run. Last year, spot ETF, Bitcoin spot ETFs got approved, Ether later. The election, some movement, obviously the upside, but we haven't seen what crypto traders and investors would call an alt season, like where you see these kind of 100x type moves sometimes in select assets, or just 10x, 20x type moves. Really haven't seen that. We've seen that in selective assets, but we haven't seen it as broadly so far. And a lot of people are expecting that for 2025. I know cyclically it leans towards that in 2025, which we'll get to, but we'll see. No guarantees on that. But we are far from any kind of peak in my analysis for altcoins based on this chart. So I'll stop here if you want to interrupt me at some point, or I could just
No, that's really interesting. I was actually more thinking of that first chart with the 4-year thing, and I was kind of curious if there's any relationship between the 4-year election cycle. I was just talking to Ryan Dietrich on Wednesday for the NAAIM webinar, and he's really spent a lot of time on that. It just got me thinking it had a very similar style to it. So I was curious if there was some overlap there.
Yeah, that is certainly interesting. I would say, since I have been interested in crypto, studying crypto and beyond, the elections have seemed not that consequential in terms of the asset class until this election. Whatever you think of President-elect Trump and the administration coming in, pro or con or neutral, wherever you land, it's hard to argue with the idea that it's a very pro-crypto administration. Gary Gensler, the SEC head, obviously has already resigned or will, as tendered resignation, I guess will resign shortly. I'm not sure what that date is, whether it just happened or it's about to happen. But at any rate, so there are, there are a lot of arguments for a very favorable period in this key year of the cycle, which I'm about to get to. But it's awesome. Interesting, the presidential aspect, in the U.S. It's certainly, it's a good question. I don't know if I have a great answer to it, but other than this election seems to be the most consequential to me related to crypto because of this kind of regime change of governance and regulation and so on that we're about to see, for better or worse, but it's certainly going to be interesting.
Perfect. No, I'll let you continue on that.
Yeah, awesome. All right. So the next little section here, wanted to, for myself, I wasn't really planning to share it, but for myself, kind of know the kind of the past analogs for halving. So on the bottom of this chart, you see these dates. There's November 2012, there's July 2016, then there's 2020, and then last year, April 19th, 2024. These are the halving dates where the Bitcoin block reward got cut in half. What you see then displayed are the number of days following that specific halving date when Bitcoin topped out. So after that first halving in 2012, it was just over a year later that and crypto never sleeps. There's no difference between a day and a trading day, right? That's exactly 367 days later. That's when Bitcoin topped out in that cycle. Now go to another period following the 2016 halving. It was 526 days later. Following the 2020 halving, Bitcoin topped out 548 days later. Or kind of a footnote, that was November 2021, the 548. But in the spring of that year, there was that was really the first peak, and it corrected about 50%, rallied back later that year, got a little bit higher, slightly elevated all-time high, not by much. And so you could really arguably take either of those dates, 338 days to the spring high following the 2020 halving, or 548 to the November high. So where are we now? As of today, we're 266 days past the last halving. So just not in a predictive sense that I'm trying to predict the next top through this kind of limited crude method, but just for an idea of when, using past halvings and the subsequent tops as kind of an analog, what would that look like in 2025? That's kind of the idea. So let me go to the next one. So looking at those same number of days that we just did past each halving,
gotcha.
Shortest to longest, this would be the analog top date for Bitcoin. So the earliest would be, again, if history were to repeat exactly in any of these iterations, earliest would be March 23rd, so the very end of the first quarter. 367 days would put us at April 21st. So you could see a kind of a late Q1, early Q2 Bitcoin high if this were to repeat. If you have kind of the longer halving cycle, then you're looking at the fall sometime, late Q3, early Q4. Now, none of these could play out. I don't expect any of these dates to be the top, to be clear. Okay, just to be very clear, I'm not trying to project the top, but this gives me a sense based on the prior halvings of what the possibilities might be, or at least the range of possibilities. So again, it's not a hard fact. It's not a quantitative analysis so much as it's just kind of a framework to think about the kind of on-chain metrics that I might look at for a potential Bitcoin high, crypto market high, etc.
And that's interesting. It is a small sample size, but it's interesting you get little clusters around that first quarter and little clusters in that third quarter. So
yeah,
there might be something. Yeah. It's not a signal, but you should pay a little more attention around those times, is what I find.
Yes, it's good, just good knowledge to have. This is just some knowledge that may or may not prove useful, because really I could come back another time and give like key metrics and that have been very predictive of Bitcoin tops in particular. But a little bit, I figure it's a little bit beyond today, but at least, kind of interesting based on past cycles. So this, I kind of just said this, I don't need to really go through the slide, but a faster cycle post halving would be, like I said, late Q1, early Q2, or the fall, as we were just going through. Last couple of things I wanted to share are charts from Source, being Into the Cryptoverse, very good analysis site on crypto. And so you see in blue, that's the Bitcoin price historically from whenever there was good data, which is like kind of mid 2010. Most people, when I do quantitative analysis of Bitcoin, I always start at 2011 and I go to the present. So, but there is data a little bit before that. So that's what this reflects. And the red oscillation you see are proprietary risk bands to this site, into the cryptoverse. So it is proprietary. So period. I don't have any exact knowledge or beyond kind of an insight into, standard deviation and some other factors that go into these risk bands. But essentially, what you see here in this historical chart are these spikes around Bitcoin highs. And the one time that we spiked pretty dramatically, but to a high in 2020 in the spring, but then did not see any kind of risk band elevation or extreme reading up here in the 0.85 or higher area, was in the last cycle high in 2021 in November. So in 2021 in the spring, that high, we had an extreme risk band reading. That did not happen at the actual high in November. There just wasn't that kind of momentum and so forth. A lot of metrics did not read extreme at that time. And the macro winds changed, and we all know, obviously, the bear market that ensued for most assets, including obviously Bitcoin. But the point of this chart is not to talk about all that past, but just kind of where we are now. Bitcoin is in this kind of middle risk band area. It's in an area where it's spent a lot of time, and it's nowhere near an extreme, at least based on this one way of looking at Bitcoin with these risk bands. So let's look at the distribution of days of Bitcoin in each of these bands. It's kind of a different way of looking at the same chart. So if I go to the next chart, what we've got here is all of Bitcoin's history in this distribution chart, right? So you've got these very pronounced distribution bars where you see, for instance, in this one, and let me move something that's kind of blocking my view, but in this 0.3 to 0.4, you can see the number at the bottom there. This 0.3 to 0.4 risk band, this is the risk band that Bitcoin has spent the most time in. To the right is 0.4 to 0.5. Obviously, that is next. It's spent the most days, about 1,000 days of its history in that risk band. The risk band that Bitcoin is in now is this this further to the right, 0.5 to 0.6, and so forth. What typically happens is the far left, the 0 to 0.1, this is where Bitcoin has spent not a lot of days, but days when it's been very distressed, right? Bear market, getting slaughtered. The news is just absolutely hating on Bitcoin and the crypto market. It's all negativity. That is when you see Bitcoin in that kind of a risk band or bucket. And what I find interesting is if you look at the very top, which corresponds to not every, it does correspond to almost every high in Bitcoin, this 0.9 to 1, but Bitcoin has spent very few days there. So what that's telling me as a reader, inferring, from this chart, is that the Bitcoin high, like 2017, when it runs up to 20,000, it's there for a moment. It is a very short window of time if one is trying to time, which I'm not suggesting one tries to do with crypto, but if one is trying to do that, it's a very, very narrow window. That window is just cracked very, very slightly, and there's very little time to act if one is not, and one better have, some metrics one's watching if one is trying to get the kind of the high of the crypto market or in that vicinity, right? You asked for an investment quote, which I did not include, which I'm going to say right now, which maybe I should have included.
Go for it.
Which is, I'm going to paraphrase because I'll probably get it wrong, but in reminiscences of a stock operator, Livermore said, or was, it's attributed to have said that the first eighth and the last eighth are the most expensive, right? Which is another way of saying pre-decimalization, Trying to
Yep.
get the bottom tick, trying to get the top tick, it's a fool's errand, right? So can be very expensive when you are trying to do that. You fail, the market leaves you, and you're sitting there like a dope. You didn't scale out, or you didn't have a method, or whatever. So again, very fraught to try to get the top or near the top. But these wristbands are just one of the tools, not one of my own creating, but one of the tools that I'm using to watch where we are in the overall cycle.
Sure.
Because again, Bitcoin spends very little time at the extremes, both extreme greed, kind of
hmm
impulsive extreme, as well as an euphoric extreme, as a
Yeah.
on the other side, obviously in that kind of distress
Right.
environment.
And I'm looking at your previous slide on here, and it does look like it when it really pushes these high ends, even the top two. It may be near a top, short term though, because it looks like the tops come, like looking back at 2014, that was a pretty good one. 2013 wasn't very long. You know,
Yes.
it's more of a tradable top than a top, right?
Yeah, it has done both.
Mhm.
It's a good observation you make, Ryan. And if you look at the which was I looking at earlier today? If you look at the I think this looked at the 2020 into 2021 cycle, you had a lot of extreme readings, if I'm not mistaken, or maybe I'm thinking of the prior. But you do have times toward a cycle high, where you can get many of these readings, right? I mean, it's kind of like we all know with an oscillator indicator, a market breaking out can pin an RSI or stochastic or whatever, to a so-called overbought reading.
Right.
But we know that it's often a market just waking up, and it can pin that for a while. So context is key, of course.
Of course.
But yeah, it's one of the tools, as I said, that I use among others.
Nice. No, that is a very cool tool to put that into context. I really haven't looked at crypto in that light, so I like that. I'm more of a trend following thinker,
Yeah,
so that's a little contrary to what I do, but I always appreciate that insight. So that's pretty cool.
sure. Yeah. I don't know if I thought, yeah, I guess I didn't include. I was going to include one more image
Mhm.
of that same distribution, but this cycle only, as opposed to all the
Oh,
history. But I
interesting.
guess I didn't do. I chose not to do that.
No worries. We're just about out of
Yeah.
time anyway. So of
Okay.
course we're just going to ask you a couple of your favorite, well, just one of your favorite quotes, but you brought two. So what are they, and why do you like them?
Yeah. Okay. So now I don't know. I heard this from NAAIM's own David Daughtry at a NAAIM conference. So big plug to NAAIM, because those events are awesome. And he said this or something very like it, and he might have credited somebody, but I don't remember. So I'm crediting David. But concentration builds wealth, diversification keeps wealth. Um, this stuck with me. It wasn't a revelatory idea. It's not something I think about every day, but it is it's an interesting quote. I like it because I've met people, whether they're clients or just in life, whether in this business or not, who have had an early start with a big concentrated, either liquidity event, where
Yeah.
their company gets overtaken, they own the majority of shares, or they, a real estate developer who is just big on his, in this case, real estate development business, and then gets more diversified later, seeks
Sure.
out managers like myself and many others. So, there are a lot of examples of this, but I always liked that quote and remembered it, or at least remembered the paraphrase of it.
Mhm.
And then this is my own adage and kind of a mantra. I think of this all the time. I'm sure others have said it, but to me, in my brain, as I'm looking at the market portfolio, even though I'm quantitative on the equity side,
Mhm.
I'm always thinking, what can go wrong? What can go off the rails? What could go right? Possibly more so than I realize. Where are the fat tails? They can happen: upside deviation, downside deviation. anything is possible. In financial markets, anything is possible at any time. So
Absolutely.
that's it. It's just something I think routinely. When I'm talking to other people, I say it routinely. And to me, being very risk-minded, that is job number one. If there's a holy grail in markets, which there isn't, it's the closest thing would be risk management. So that is just kind of my own mantra. I think of it all the time. I say it routinely to trader friends when we're talking, and
Nice.
there
Fantastic.
you go.
And then finally, how does somebody get a hold of you if they want to stay in touch or follow you?
Yeah. Just email me, David Bush at alphatative.com. I've also got a couple Twitter handles there and a Substack newsletter if you're interested in the crypto space. That's where we issue insights on crypto.
I read that one. It's a good one. Appreciate you having me on the list. So.
Hey, thanks so much. Appreciated being with you.
Absolutely, absolutely. And you said you'll be at, will I see you in the conference in it's Orange County in May?
You will not see me there. You will see me in the fall. I assume Chicago, yes?
It should be Chicago from what I know. So
all right, wherever it is, I'll be there.
Well, that's too bad. I'll see you at some point in the future. It's always good to see you in person, but this is great to have you on Name Confidential this week.
Yeah, always, Ryan. Thank you so much.
Appreciate it a lot.
Pleasure.
All right, we'll see you all next week. Thanks for being here, Dave.
Thank you.
All right, bye everyone.